Hi everyone, and a very warm welcome to this brand new edition of Moneycontrol Markets Weekly. I'm Karunya Rao, and joining me in conversation today is Mr. Pankaj Murarka from Renaissance. Thank you so much, Mr. Murarka, for taking time out to join us for a chat on markets and the way forward.
Thank you, Karunya. It's a pleasure talking to you.
Likewise, thanks for joining us. If we look at this week, it has been quite eventful. We saw both benchmark indices make a fresh lifetime high, whether it's the Sensex or the Nifty. Broader markets also trying to catch up as far as the up move is concerned. But today, if we look at the way the markets behaved, there was some bit of selling that was witnessed, which caught the people on the street unaware. 17,500, of course, was a key resistance level for Nifty 50, which it has broken finally. The sentiment seems to be quite bullish at this juncture. Therefore, today's sell-off took everybody by a bit of a surprise, really. What do you think, is happening, and what is the way that the market should brace themselves for? Where are they headed?
Karunya, I think there's no denying the fact that we are in a bull market. I can tell you from my experience of last 25 years, this is probably the most ferocious bull market I am seeing in my career after the technology bull market of 99-2000. To put things in perspective, you see how markets have behaved in terms of the kind of gains we've had from the lows of last February, March, where at the onslaught of COVID, then I think the move in the market has been phenomenal and ferocious. The good thing is, as economies unlocked later part of the last year, and now as we unlocking after wave two this year, we are seeing a very strong recovery in Indian economy, which effectively makes me firmly believe that this bull market is here for a long period of time because we're going to see a strong recovery in Indian economy. And if that be the case, then equities are bound to do well. Short-term volatility corrections will happen in markets, and I think they are good or healthy for a long-term bull market because what it effectively does is it shakes out some of the weaker players or leverage players, and inherently it makes markets stronger and healthier. So I think from an investor's perspective, they should focus more on the medium term to long term outlook for the market, which remains extremely positive or constructive. And we'll have to learn to live with these kind of short term volatilities, because they are going to be part of the journey.
So, given that we are in an ongoing bull market and, we've not seen any significant correction or any kind of selling come by, do you think it's only going to get stronger and better from here on? You don't foresee any correction anytime soon? Of course, near-term volatility is something you've already flagged off, but nothing meaningful in terms of correction?
Corrections will happen. It's very difficult to time a correction in a bull market because the moves are so strong, right? In a bull market, as we've seen, let's say last year or this year, market moved by 40-50% in a year. So corrections will happen, but it's very difficult to time. And generally, corrections in bull market happen because of some news flow or an external event, which for a short period of time could surprise markets or take participants by surprise. So I think one should not think too much about corrections as long as we have a time horizon which is like 2 to 3 years, and if at all correction happens, one should be willing to take that in one stride. So the point I'm going to make is corrections will definitely happen at some point of time or other, but it's very difficult to time it, and one should focus on fundamentals and stay invested with a medium time view on the markets into equities.
Do you have a view on Bank Nifty, or rather the entire banking space, really? Because, despite the rally that we've seen, Bank Nifty, of course, has been a huge contributor to that. The up move that we've seen of late, even today, it was quite strong. It has continued its bull run since yesterday's long pending breakout. If I could use the word breakout here, but overall, where do you think the bank sector is? How is it placed at this juncture? Are there any pockets, not just banking, but even the overall financial services that you like and that one should look at this point in time?
So you are absolutely right, Karunya. Over the last week or 10 days, we have again started seeing some up move in banking stocks and Bank Nifty, which otherwise was underperforming the overall market for the last 6 months. and that was primarily because as the wave 2 played out in India for COVID, and we again went into lockdown, there were fears about there could be rising NPAs for banks once again. But what we've effectively seen now that one states and cities have started unlocking, and as soon as that has been happening, there is a very strong recovery, or in the collections of the banks which they do from retail customers who have taken money from banks towards their home loans or auto loans. The EMIs have been, they've been paying their EMIs in a timely fashion. So that fear is receding. That banks will see a spike in NPAs, and as economy unlocks now, we'll start seeing a uptick in credit growth or loan demand from customers, and which is why we have seen this up move being started in the bank over the last few weeks. So I think the outlook for the banking sector as a whole remains positive from the next 2 to 3 months perspective. And from a positioning perspective, I'm very positive on the larger banks, essentially the 3 or 4 large banks, be it that ICICI Bank or HDFC Bank and SBI. We like all the 4 large corporate banks. And I must add that we have holdings in these banks in our portfolios. And at the same time, within financials, apart from banks, we also like some of the larger NBFCs as well, essentially who have been well capitalized and who have managed this COVID crisis very well. So I think as a combination of unlocking of the economy and strong loan demand coming forth, these banks and NBFCs should do well.
Okay. Okay. Makes sense. Let's also shed some light on what's happening in two sectors that were really, in focus this week, telecom as well as media. I'd like to address telecom first, of course. A lot of action happening there, whether it's Airtel or Vodafone, which is, investors and traders' favorite stock respectively. Some people are giving targets of 1500, sorry, for Airtel, and they expect a huge revival as far as Vodafone Idea is concerned. A lot of their lenders, like IndusInd, for example, which have huge telecom exposure, have also seen a solid up move this week. But talking purely about the telecom space, is it something that you like?
Absolutely. We're extremely bullish on telecom as a sector. We need to remember that if India is going to digitize, and if all of us are going to use more and more technology in our daily lives, and if e-commerce and internet businesses are going to grow in India, and COVID has only accelerated digit the pace of digitization of India and global economies, then all of this is riding on the back of telecom networks, right? So we're using more and more data and using more and more bandwidth from telecom companies. So if internet and data consumption is going to grow, then telecom companies have to do well. More importantly, the sector has gone through a massive consolidation in India. If you look back, 4 years back, before Jio launched its services, in India we had 10 telecom players. Now we are left with only 3 telecom players. So the sector is far more consolidated today. And generally, experience tells us that when a consolidation happens in a sector, the sector is able to drive a very strong pricing power, which we believe that will play out in telecom sector over the next 2 to 3 years. And I think finally, the telecom reforms that the government announced yesterday are really path breaking. It gives a new lease of life and to the whole sector, and more importantly, it sets the roadmap for very strong growth in the telecom sector for the next, I think next decade. So I must admit that I am extremely bullish on telecom sector as a whole, and I firmly believe that all the 3 companies in telecom will do well.
Okay. The whole point of the weekly live that we do is to engage a lot of retail investors who especially are new to the market or are just trying to navigate and figure out their territory, figure out their goals and strategies. So we also tend to take a lot of viewer questions as well that come in live. So I'd like to address one of our viewer queries, which says, can you suggest what kind of stocks to invest in if one has a idle capital of 3 to 4 lakhs? stocks that haven't seen a big rally till now, but are potential multi-baggers? I know, I mean, you would rather not get too much into stock details, but are there any sectors that you can nudge our viewer to the right direction, which you like at this point, which could hold good promise for the next, from a medium to long-term horizon, perhaps?
So I'm extremely bullish on internet as a sector in India. I think we are at our internet economy is at a very important inflection point, and COVID has really accelerated that. So what has happened in the Western world, in developed markets in US and Europe, with internet businesses over the last 20 years, I believe that will play out in India over the next 120 years, because all of us will be using more and more data technology in our daily lives, and every business eventually will get digitized over the next 10-15 years. We've had a handful of internet companies which are listed. Some of them have gone public in the last few months, the likes of Zomato and a few more, and there are many more which are lined up, over the next year or so. So I think if you look at, if you look at US in terms of the kind of wealth that this internet businesses have created over the last 15-20 years, be it, let's say, a Facebook or Amazon and many more, something similar can happen in India, because now we have the second highest internet user base in the world after China, given our population base. Yeah, and because after Geo's onslaught, data prices have come down very sharply, so the data consumption has increased exponentially. So I see a very bright future for internet and telecom businesses over the next decade. I firmly believe that there will be a huge amount of wealth creation that will happen for investors in these sectors over the next 10 years in India.
Earlier this week, we also saw an IPO of an auto ancillary company, Technologies, if I'm not saying that incorrectly. And there's been a lot of investor interest in not only IPOs per se, but specifically they're looking for good bets to play the EV theme, given that the government has also been pushing for electrification of vehicles. There's a long way to go still when it comes to volumes or infrastructure, but still, things are moving in the right direction. So if one has to see the big picture, what are some kind of companies they can look at to play the EV theme, or whether it's OEMs, ancillary, or any proxy play?
So, very interesting question, Karunya. I think this whole EV space, as it's evolving, is very exciting from an investor's point of view, because now all of us know that probably in the next 10 years, a significant part of automobiles on the road will be electric. And there's an entire ecosystem around it, because it's not just about the OEMs who will manufacture EV electric vehicles, be it passenger cars or two-wheelers or three-wheelers, but it's also about the ecosystem, because we need charging stations, we need battery technology. Plus, when OEMs manufacture those EV vehicles, then there will be vendors or auto ancillaries which will supply them the drive lines, or the and so many other components which will go into the electric car, and all of these are evolving. So, for example, I'm just giving an example. Tata Power is setting up EV charging stations across India, and they have very aggressive plans around it. So probably, if EVs are going to grow, then we will need all those charging stations. Likewise, OEs, we have seen Tata Motors has already launched 3 EV vehicles, and they've announced a plan by 2026. All their current vehicles, passenger vehicles, will be on the electronic platform. More importantly, by 2030, they intend to have 10 electronic EV vehicles, passenger cars in the market. And some of their products have got good response, though the volumes are still low. So there are a lot of companies across the whole EV ecosystem that are there, and I think many more will emerge as the sector becomes larger. And I feel excited about this opportunity as well.
Absolutely, and so is everybody else on the street because there is clearly a lot of traction, and week after week as well, we also get a lot of questions and queries for EVs. Another question I'd like to address from our viewers is on metal space. What are the prospects for the next 2 to 3 years? Is the commodity cycle going to last longer, or has it already started to show signs of peaking out?
My view, I think commodity prices have risen very sharply over the last 1 year because of sudden resurgence in demand that happened as economies unlocked worldwide, and more importantly because of supply chain dislocation, because a lot of plants or mines in different parts of the world are not able to operate at full 100% capacity because of multiple issues around COVID and lockdowns. As economies start unlocking, and they will unlock by the end of the year, I think commodity prices should soften from where they are today. Having said that, I still believe that over in the last, in fact, 15 years, there has not been any meaningful investment into new capacities in commodities across the world. So, just to give an example, today the total copper production capacity worldwide is exactly the same as it was in 2005. In the last 15 years, the world has not added new copper production mines, which
Yeah.
effectively means that if copper demand goes higher, then prices will go higher, because you cannot add production capacity in a short span of time. It takes 4 or 5 years to set up a new copper production capacity. And if the world is going towards electronic vehicles, then the consumption of copper in an electronic vehicle is 8x more than that is in a normal, fossil fuel vehicle. So I think my view is the average commodity prices for the next 5 years will be higher than what they have been in the last 10 years. Though in the short term, they might cool off from the highs where they are.
Hmm. Okay. Let's also talk about your concentrated portfolio. We've already addressed financials and learned what is your assessment of that whole basket. But you also have a fair amount of exposure to consumption and pharma. Uh, can you tell us what are the kind of bets that one could take at this point in time from the medium term to longer term horizon when it comes to the consumption basket? Is it pure play FMCG? Do you like perhaps white goods or retail plays? I mean, what is it that investors can look at? And
Sure.
same goes for pharma.
Sure. So we are very excited about both the themes and the sectors, Karunya. Essentially, what has happened is over the last 18 months, because of lockdowns and work from home, consumers have been, or all of us have been locked up at home, and we have not moved out of our homes. Uh, and as a result, which consumer spending has been impacted. What we have seen in most of the economies like US and Europe, as they unlock, there's been a very sharp resurgence in consumer spending. There's something called a revenge spending that has happened, because
Hmm.
consumers have spent money, for a long while. They haven't visited malls, they haven't bought new clothes, they haven't gone to a hotel or on a holiday. And as soon as economies opened and vaccinations happened, there was a revenge spending, revenge travel that has actually happened in US and Europe. And I think something similar will happen in India as well once we get over past this fear of third wave of COVID by October, and once our vaccination percentage increases. So I'm of the view that we'll see a emergence of revenge spending and revenge travel from consumers in India in calendar year 2022, and most of those spends will be more on discretionary consumption. So it will be on
Hmm.
travel and hospitality, it will be on hotels, it will be on apparels, because consumers will, because of work from home, many people have not bought new set of clothes or apparels, and social functions have not happened, be it weddings or celebrations, and as a result of which people have not bought into their wardrobes, and all of that is going to come back, and come back with a vengeance. So I'm extremely positive on consumer discretionary spend, because I firmly believe that people haven't gone to a theater to watch a movie now for almost 18 months,
Hmm.
and there are so many movies which are ready to be released, just waiting for theaters to open up. So I believe
Yeah.
once theaters open up, everyone is going to just rush into theaters, which is what exactly happened in US as well. You know. So I'm extremely bullish on consumer discretionary because I think consumers will spend and they'll spend very aggressively. Likewise, I think this COVID crisis has shown us the importance of healthcare from a global perspective. And the fact remains that India is the pharma capital of the world because 40% of generic medicines that are sold in US, which is the largest pharma market, are manufactured in India. So if Indians don't produce medicines, US will have trouble, and we are the least cost producer of those medicines. And I think this focus on pharma and the spend on healthcare will only increase very significantly over the next 10 years, and India will be a big beneficiary of that. So, which effectively makes us very bullish on both the themes.
So you were talking about revenge spending and demand coming back quite sharply. That is typically what also happened last year as well when markets and the economy started reopening. Though this time it has been relatively mellow because even the extent of lockdowns were less strict. But let's talk about the festive season scenario as well. Do you think this time it's going to be back to normal?
Oh, meaning
Demand.
my anecdotal observation has been, you see the Ganpati festival in Mumbai and Maharashtra, and I see, similar kind of celebration as I used to see in pre-COVID times. People are exercising restraint and caution in terms of making adequate precaution, but they're still spending and doing all of that they usually do in a festival to a large extent. So I think as vaccinations improve, I think all of us will celebrate festivals because that's very much part of our, lifestyle, and we, as being social animals, we just can't not do that.
Okay, well, point taken. I'll keep it with the consumer theme, and I have to talk about ITC. This is the favorite stock when it comes to making memes, all over social media, WhatsApp groups, and everything else. We've always seen people make fun of how slow a mover ITC has been, but this week it completely sort of debunked that story, and there were a completely different set of memes that we saw on the back of the phenomenal uptake that ITC finally staged. Do you have a view on this particular stock? I mean, we're not getting any queries on this, but I'm just curious to understand what is it that people like yourself have to say about ITC?
Yeah, you're absolutely right. Meaning, ITC has been the star of social media and the kind of I get on WhatsApps and stuff like that. Having
But
said that,
only this week it became, truly a star because all of this, up until now it was just, a butt of jokes and, always subjected to a lot of mockery.
my personal view, I think obviously the company was a laggard in terms of their execution on their business, but it's been a couple of years that they've seriously opened up for it, and we see significant change and improvement in the strategy and significant improvement in their execution as well. But because ITC is a very large company, it takes a while to show up in terms of their numbers. So I find if you really ask me, I find deep value in the stock. More importantly, I think there is a much greater focus and aggression in management execution on their consumer side of the business. And more importantly, I think they have a large piece of business which is around hotels. Now, if revenge travel and revenge spending comes back, then their hotel piece of business will be a big beneficiary of that as well. So I find deep value in the stock, and personally, my view is for any investor who is willing to take a slightly longer term view, which is like 2 to 3 years view, I think it makes a compelling investment case. I understand that ITC underperformed the markets for the last 6 or 7 years, but I think there's very high probability, and my view is that it will make up for all of that underperformance over the next 3 years.
Okay, just a couple of more questions, Mr. Murarka, before we let you go. Almost all the sectors, whether it's IT, FMCG, real estate, all of them are at their peak, and the stock prices are reaching all-time high on a daily basis. We've seen in the last 1 week as well, the whole trend playing out. But there are two sectors which have been a bit of a laggard when it comes to the market move. Banking, we've already addressed, but I'd like you to talk more about auto, not just from an EV standpoint, but from an overall industry standpoint, consumption standpoint as well, because banking finally has started to pick up. What do you think will be the trigger for auto sector finally to sort of get out of that slumber?
So I think all we need is a normalized unlocking of the economy, because as that happens and as the economy improves, my expectation is we'll see a very strong demand recovery in commercial vehicle segment in India. And also probably COVID has changed to some extent consumer behavior, when in the context that probably once now economies unlock and people start visiting back to their workplaces, they might want to have a safer travel, and as a result some people might move away from shared travel to owning a personal vehicle, be that a two-wheeler or passenger vehicle. So I think the sector will come back, and will come back very strongly. All we need is a normalized economy, which is completely unlocked. And secondly, there are some production disruption that has happened in the auto sector, not only in India but globally, because of shortage of semiconductors. As a result of which, in fact, as we speak, even now, in some of the,
Hmm.
if you see all the models of auto companies in passenger vehicles across Maruti, they have a wait list of 4 to 5 months. I think so. The semiconductor supply shortage which exists globally should get normalized hopefully by next year, February, March, and auto companies should be able to ramp up their production after that, and the waiting timelines on a lot of these models should come down drastically. So I think probably next year will be a year when we'll see a strong demand come back in auto sector as well.
But will that purely be because of the low base of this year, because production constraints have really piled up? Or will it
No,
be
not
actually a meaningful, sustainable pickup in demand?
yeah, so no, I don't think so. It will be just be because of low base, Karuna. In fact, if you really ask me, take a slightly more longer term view. I'll give you an example. You go back to 2010, and China was the fifth largest auto market in the world. As China's economy grew, today China is the largest auto market in the world, and they've even taken over US. My
Hmm.
view is probably in next 6 to 7 years, India will emerge as the third largest auto market in the world after China and US. So, because as consumers, as the economy grows and people make money, they would want to buy a car.
Hmm.
So the penetration of passenger vehicles in India is still very low. And secondly, people who already have consumers who already have a passenger vehicle, they want to upgrade to a superior car as they make, as they progress in life. So I think the auto sector probably, if you talk to auto companies globally, then they firmly believe that over the next 10 years for them, India is the most exciting market from a global perspective, because that is where all the growth is. So I think the prospects for auto sector remains extremely bright from a longer term perspective.
All right. Well, just before we let you go, any thoughts on, how retail investors, especially who are new entrants into the market, should sort of position themselves, or devise their strategies at a time when the markets are already at peak levels? What should they be bracing themselves for, and what kind of a mindset, more importantly, to have?
I have three pieces of advice for all my friends and retail investors who are there and probably will read or watch this interview. One, the general perception is that investing into equity is a risk.
Hmm.
But I can assure all my friends and investors that not investing into equity is a much bigger risk than investing into equities. Because if you don't invest into into equities, then you will miss on the potential returns, and there is no asset class in the world which can give you returns which can match the returns of equity. So always remember, not investing into equity is a much bigger risk than investing into equities. One. Second, India is at a time where the next 10, probably the next 15 years is going to be India's time from a global perspective. Indian equity markets and Indian economy is the most exciting place in the world. Every developed economy has had a period of 10 years or 15 years where they've had a secular bull market in equities for 15 years or 20 years. It happened in US in the 80s. It happened in Japan in the 60s. It happened in China in the 2000s. And I think now is India's time. So you can't afford not to participate into the mother of bull market that we have ahead of us in Indian equities. And thirdly, don't look upon equity as a tactical asset class. Just like all of us in India, we buy some piece of real estate, either a home or some commercial real estate, and then we never sell it. We hold it forever for our life and we pass it on to the next generation. Likewise, equity should be a core and strategic asset class in every investor's portfolio. Invest into equities and then just stay invested for all your life, because no other asset class can match returns which equities can give you. Don't bother about daily volatility and daily stock price movements. Just be a very long-term investor into equity, just like you are with your fixed deposits or you are with your real estate. Uh, and bear in mind the first point which I said, not investing into equity is a much bigger risk than investing into equities.
And on that thought, Mr. Murarka, we'll wrap it up on this edition of Money Control Market Weekly. Thank you so much once again for joining in. And thank you to all our viewers for watching us week after week. We'll be back next Friday with a brand new guest. Thank you once again for tuning in.
Thank you, Karunya, for having me on the show. It was a pleasure talking to you. Thank you so much.
Likewise. Thank you.